And so I got so involved in the physical gold. And then fortunately, when it started to break above 3,000, I switched to the producers. And then a couple of months ago, I sent it all in, kind of speak, on the juniors. And that has really been rewarding, along with, you know, turning bullish on silver. Even at your conferences years ago, silver bugs would get mad at me because when they ask me, what do you think of silver? I say, well, it's like kissing your sister. I always put gold ahead of silver
Yeah.
until recently. And I actually said I thought silver could outperform. And as you and I speak today, it's finally breaking out. And so overall, it's been a great success, but it comes with concerns, Mike. And I know you express them because I listen to you every day. I think this is the most troublesome I've ever felt about the whole picture in my
Mhm.
42-year career.
One of the things I so much enjoyed in my career over the years is getting a chance to talk to Peter Grandich. And I mean, I knew Peter, well, I don't want to say how long ago because he still looks fabulous, but it was a long time ago. I knew him when the Wall Street Journal was calling him the Wall Street whiz kid, et cetera, et cetera. Peter, first of all, appreciate you finding time here. And boy, I think it's fortuitous. I'm just looking at the kinds of things you've told our audience, told yours on petergrandich.com, told our audience, told them at the World Outlook Conference. And man, things to be really unfolding the way you wanted them to, or thought they would, not wanted, but thought they would. I'm talking about, boy, as recently as going back to the Outlook Conference, you said you better get involved in silver as one example. I'm going to get to some other examples because you were right about gold taking a pause, right about resurgence in copper. So give me your overview at this point.
Well, first of all, it's always an honor to speak to you, Michael, after all these years. I consider you a refreshing breeze of financial journalism out of Canada. So it's always a pleasure to speak to you, my friend.
Thank you.
Yeah, it's been a quite interesting journey for me. I have noted that in my 42nd year, it's hard to imagine that when half the financial service advisors in America right now weren't even born when I
Yeah.
started. But the bottom line is, it's been probably the best 5-year period for me for my entire career in terms of successes over failures. And one of the areas that was a real blessing was in the end of 2021, as I spoke to you, I said, Michael, we're 1 in 1,000. I thought gold would actually outperform both stocks and bonds for capital appreciation. Good part of that was because of what was happening with BRICS, and now we've seen it with this trade war. And so I got so involved in the physical gold. And then fortunately, when it started to break above 3,000, I switched to the producers. And then a couple of months ago, I sent it all in, kind of speak, on the juniors. And that has really been rewarding, along with, you know, turning bullish on silver. Even at your conferences years ago, silver bugs would get mad at me because when they ask me, what do you think of silver? I say, well, it's like kissing your sister. I always put gold ahead of silver
Yeah.
until recently. And I actually said I thought silver could outperform. And as you and I speak today, it's finally breaking out. And so overall, it's been a great success, but it comes with concerns, Mike. And I know you express them because I listen to you every day. I think this is the most troublesome I've ever felt about the whole picture in my
Mhm.
42-year career.
Well, one of the things that you make some comments and they age poorly or age well. This one aged well, and this has been our theme: is if people are expecting government to bail them out, they're going to be really disappointed. I'm not talking the politics of it. I'm just saying government. And so you have to protect yourself. And I still think that's the case. And I think the things you elaborated on and recommended are exactly how you do indeed protect yourself.
Yeah, Mike, 7 out of 10 families that I still a part of a financial planning group here just for U.S. residents, and still 7 out of 10 families come in doing two things that are not going to lead to success. One is they're continuing to spend more than they make,
Yeah.
which is a government success story. They do it the best, and they also have not an understanding of how difficult it's going to be, and not the expectation that somehow, as you said, government will be there to support them at a time when the government is running to the point, at least here in the US, where we may not even be able to stop paying our interest payments, let alone forget about paying back, 36 trillion on the way to 50 trillion and all. And I think the other important thing that needs to be discussed, and if you don't mind, I don't want to change your course and all, but when I think
No.
about Canada, it was my home away from home. I spent more time there certainly than any other place, and I was there on a monthly basis for over 25 years. And when I think about Canada, I think about the most ever there was a difference of opinion was an old movie called Canadian Bacon, which really made fun of both sides, but it really demonstrated underneath what great allies we were, what great dependents we were. And now I don't see that. I know I still have a lot of Canadian friends, and I think the United States, and this is a big part of my planning, I think Trump did good in terms of immigration. I think he did some positive things in the Middle East that could work out, but I think he made a very big mistake carrying a big bully stick into this trade war instead of an olive branch. And I think it's going to come back to bite him, including with Canada.
Well, it's interesting how many people just discovered the word tariff means they're paying. And it doesn't matter if it's in the US, I find that consciousness, increasing, and it's things like the 50% aluminum tariff. Well, you've got Alcoa saying, oh, good, that'll cost us 2,000 jobs in the States, by raising the costs. Or I was reading about a tin can manufacturer, pop cans, the aluminum pop cans, saying how much this is going to be devastating. On the Canadian side, again, I can guarantee at first, people didn't understand when we put on a retaliatory tariff, Canadians are paying them. And I think all of that's working through. And no, it's just not sound economic policy. I couldn't agree with you more. It's a shame that that's how it was launched.
Yeah, and Mike, the shame of it really is that Canada is, and you follow it much more closely than I
Hmm.
do, but it's always been a favorite place of mine, so I still keep an eye on it. I used to write a newsletter called North of the Border about Canada. And
Yeah.
Canada's gone down the same road with us, and we're going down the kind of same rabbit hole together. Even though right now there's a lot of friction between us and all. And when you look around the world and you see it, there's not a lot of great spots. Like if you say, like, if I'm not going to stay in North America, where would I head? There's not a lot of places in Europe, at least Western Europe. I think France and England, even Ireland, they got huge problems with changes in culture
Absolutely.
and all kind of stuff and all. And I think America, particularly Trump, although as you and I speak, he's talking again how he's going to talk to them and all. He's talking to them because hitting them with a stick didn't work. But I think China is a very formidable opponent, whether you like them or not. And I'm not a fan. And I think he underestimated not just them, but others. And as much as he'll spin it, and you can't win a war of words with Trump. He, you can call him every name in the book and he'll just keep spitting out what he
Hmm.
feels about you. But I think when you start to see what people are saying outside his little dome, mostly everybody's going like this with the United States. And I think it's going to come back hard on us. We're already slipping economically here. We're close to recession. You never know until 6 to 12 months later that it actually was. But we're teetering on that. And I just think that makes the stock market even more concerning to me. And let me just add one thing, Mike. This, if I had to say one thing on your show, I've been advising people lately, please stop watching the stock market. Watch the U.S. bond market. The U.S. bond market is not only tremendously bigger, it's far more important. And how you know that? It's very rare that the bond market reacts to something that the stock market does.
Hmm.
But it's very often the stock market will react to what the bond market is doing or not doing. And there we have a very, very big problem. This deficit and this so-called big bill, I think if it passes the Senate in the way that it's currently constructed, I think it's going to be viewed detrimental by the few people that still want to finance us, which is going to make more of a problem for us to keep funding these deficit spending.
And that's certainly what the bond market's saying at this point. I remember going back, I think it was in October, and you had the Federal Reserve lowering interest rates, and the yield on the 10-year bond went up. In other words, we don't care what you're saying. We have other issues. And I think, I agree with you completely that you look at the inflation numbers, they're not coming down. They're stubborn in Canada, stubborn in the United States. If they do raise rates, I mean, it's a theme people have heard here on the show, and they're going to continue. If they raise rates because they're worried about inflation, well, presto, you've got a bigger deficit problem at a time when what, 2 trillion in interest is going to be paid in the next 12 months.
Yeah,
We're getting to the
I'm not a fan of the Fed, Mike, but I will defend Powell in this much. I think he recognizes his coming funding problem. That's one of the
Hmm.
main reasons why he hasn't wanted to cut interest rates, because he thinks it would make it even more difficult to raise money, that eventually we're going to have to raise rates or get some sort of, and this is just a pick of mine. I don't have anything to say it other than a gut feeling, but I believe in 12 to 24 months, we're going to need to use our gold to back bonds in order to keep getting the financing that we're going to need and all. So I think, again, watch the bond market as much as we watch the Dow each day and think that's important. What the bond market is doing or not doing, especially in terms even in other areas like Japan, that's a real critical thing that I think people have to watch.
Well, we put that up as our shocking stat, I'm guessing at about 3 weeks ago, when that 40-year bond in Japan went up from a low, I'm talking the low, but 0.15% 10 years ago to 3.5%. Can you imagine the losses that anybody who'd bought a bond in the previous 40 years would be taking? And that's the point. I just think you're absolutely right. Watch the bond market. I'm worried that people aren't understanding it, or because certain you can't stare at it and go, this would be anything good, what's going on in those markets.
We still have a large banking system in the US that has a lot of unrealized losses
Yeah.
because they put so much money in those bonds when our treasuries were only a percent and a half, and they're down double digit losses. And the Fed keeps that in their back of the mind too, and all. So again, uh, interest rates, geopolitical, economy, when you start to mix them all together, it's hard for me to come up with a bullish scenario for general equities here in the US.
I think at the very least, people should have that caution sign, flashing for them. And you have to decide what your risk, parameters are, et cetera. To me, I know that losing money is a lot worse than not making as much as I could have. You know what I mean? And I've been on both sides, by the way. You
Yeah,
know, uh,
there's an old saying that I've used. It's not how much you make, it's how much you don't lose, which is actually going to separate you from the winners versus the losers.
Yeah, so very important. And back to what we were saying in the upset, though, is that people want to know, okay, how do I protect myself? Yet we are getting tons of warning in the bond market, and in the States, it seems to be more prominent. The worries about the deficit, the worries about the level of interest being paid on the deficit federally. You have state problems too, and municipal problems in specific areas, et cetera. That seems to be getting more play. And maybe it is that big, beautiful bill that's brought it to the forefront, at least added things. But then people want to know, I get you, but what should I do about it?
Well, I've been joking with my Canadian friends for a while now, and all this 51st state, and such an insult to tell people I wouldn't want the Premier Prime Minister of Canada telling me he wants me to become part of Canada. But I like to joke and say, if you guys don't mind taking California, Illinois, and even New Jersey, and we'll just take Alberta and call it even, because
Yeah.
we have some states that are in very bad shape, Mike.
Yes.
People do not understand that. They don't have the printing presses that the Federal Reserve has. We have tremendous underfunded pensions, with a great part of the boomer group coming now, hoping that these money was going to be there. We have police and fire unions that were counting on that it's not there for them here in New Jersey. And so when you take all those issues, and two-thirds of Americans working paycheck to paycheck, our Secretary Treasurer might just change a little. He's the only guy I like out of the Trump group. I'm not a fan of Lutnick and these other guys, but I kind of like this guy. And he made a comment 2 months ago, Mike, that I think we should all focus on going forward. He noted, and I found it to be true after I researched it. He said that the top 10% of wealthiest Americans own 86% of all the assets. The next 40% have the remaining 14%, and half of Americans don't
Yeah.
have any assets at all. In fact, the bottom 50% of working force not only can't have $2,000 saved for emergency, but half of them are using credit cards or the new gimmick in credit, this buy now, pay later stuff, which now you could actually charge it on DoorDash and get your taco on credit.
Yeah.
But it's that whole mentality that's just poor to what's going on people borrowing and betting on they're going to be able to somehow pay it. I always like to say, Mike, the thing that changed between when you and I were both young and now the young kids is our parents used to ask, can we afford this? Now it's asked, can we make the first payment? And I think that's a huge change, and that's another big challenge that we face here. And I don't think it's alone here in the U.S., but I know it's acute because of the families that I still sit with and all, and I see how much they have acquired debt through car loans, home equity loans, two mortgages. I'll tell you this, Mike. First time I've ever seen this in 40 years of doing planning. Up until 5 years ago, a typical retiree coming in had no mortgage debt or really any debt at all. Now they have a lot of debt, including mortgage debt. And that's another issue for those seniors because now the biggest fear among seniors is no longer passing away. It's running out of money. And this is, again, group that's going to look for the government to do something for them at a time when the government can least afford to.
Well, I spend a lot of time thinking about what are the implications? How is this going to play through? So one of my conclusions going back several years is, the central bank can still print the money. Well, it just means your money buys less. And I know it's called inflation by a lot of people. I just think, no, it just doesn't buy very much. And that's what I love your distinction. I don't think that's in Canada. I can guarantee you it's not talked about. This gap between have and have not, which is at least half the population. In fact, surveys we get, it's about 55% say, I'm under tremendous financial stress. I'm borrowing money to meet necessities. Forget about having something in the bank. I think that's a social dynamic that is going to rear its head because, at least again, I'll speak for Canada, completely ignored. I know that President Trump could make a case that he cares about the working class, and that's what I may think some of his things are ill-conceived. I do think the tariffs are ill-conceived, as an example, but yeah, it's not even on our radar here in Canada. This huge gap between have and have not.
And if you look historically about that, because I did a lot of that in my work, that's what killed most empires when the people more and more got to the bottom rung. And eventually, even though there was some very wealthy group, eventually the masses just had to, react. And they don't react non-violently. They act
Mm-hmm.
very violently and all.
Yeah.
And I keep talking about, Mike, and I'm seeing more and more evidence. We are going to have a battle of the ages. And what I say about that is you in Canada have already experienced, and Americans were shocked to hear it, that sometimes it's been considered if an older person was desolated, either financially or physically, consider suicide. Well, we now
Mm-hmm.
have 7 states that are basically allowing that too, and more considering it. And why I say and bring that example up, it's a horrible thing to talk about, is think about this. I'm 60 now, Mike. 10 years from now, I'm still living off, but now some sort of operation to keep my life going is going to cost hundreds of thousands. Well, there's some 39-year-old or 29-year-old working taxed to death because taxes are only going to go up. He's got to be able to say, wait a minute, this guy Grandich, he's about to kick the bucket. I can't put food on my table, and you want to tax me to pay for a plan that I'm never going to collect from. I think there's going to be a big fight someday between the ages and the groups, and it ain't that far off. So it's just one of many, many things that, put me in the foxhole. More than happy to wear my chicken suit in that foxhole, but I think it's a good place to be.
I just tell you briefly an anecdotal story. I was doing a Zoom call with a group of, I'd say, 30 somethings. And one of the questions they asked is, where do you think we end up? What do you think's next? Well, I was shocked with, they thought revolution. I know it's anecdotal completely, but they recognize what you're talking about. We just saw a dynamic in the Canadian federal election where the likelihood to vote Liberal, who won, was 55 plus. But the younger generation, youth of Canada, voted Conservative because they were the one talking about cost of living or maybe convincingly talked about housing, however they dynamic, but there was definitely a split in the vote that way.
Yeah, we're seeing it here too. What's interesting, the polls, not knowing that was specific about Canada's, our polls down here are of the real younger generation is they're already talking about they don't think they're going to be able to have the things that the boomer generation had.
Yep.
They've already accepted that in a sense. And they might accept it now, but as it becomes even more stressful for them and they see boomers still that are around living a better life, I think it's going to be hard for them not to say, hey, you've gotten too much and, you've had enough. Whatever's left, we want it, not you.
It's interesting. Today's young people in Canada pay twice as much for the retirement group today than the retirement group paid when they were younger for the for that next retirement group. So that may have been confusing. They pay twice as much, is what I'm trying to say. Along that dynamic, I come back then. What your thesis is, for the market. So you're cautious, but let's come back to precious metals and especially delve into a little bit about the stocks and the juniors with that in mind.
Yeah, so I, like you said, from really from 12, 1300 on gold, it was banging the tables. But once we
Mm-hmm.
got up to the most recent high a couple months ago, we went tracked and now we're working back towards it. I shifted my focus to the producers, but then I just went all in on, is the only way to be fairly describe it, on the juniors because of the anomaly of never imagining that valuations of the thing that they're looking for is so high, and yet no one was giving them any sort of value. And at the end of the day, the people that end up looking and finding the major ore bodies or the big companies, they have not spent real money on exploration for
Mm-hmm.
almost 15, 20 years, since basically the 211, 212 high. Because by 2015 to 16, Barracks and Rios were fighting to stay above war. They got so indebted and all. So they're not about to spend a 10 or 15-year program to start to develop projects on their own, especially with their currency now going up so high and record cash flow, Michael. Free cash flow on producers is off the board. And think about this. Gold was maybe 3,000 a few months ago, and they had record free cash flow. Now it's 33, 400. So that 400 is added, but they didn't get that same increase in expenses. So their free cash flow is actually going to be higher the next few quarters.
Yeah.
They're going to go out on the merger and acquisition mode. They're already starting. In fact, today, as you and I speak, there's been several worldwide and some great bought deals where people don't even have to try to raise the money. The bankers are telling them, we got it, we want to have it and all. So I think finally the sun is shining. Just always remember this about the junior markets, Michael, because you and I have seen several cycles.
Mm-hmm.
The bull markets are always shorter than the bear markets. So don't get too caught up in it. But I think we're in the early stage of the junior market. And I think the interesting thing is it's a market that has been so ignored for so long. There's not a lot of overhang. There's not like a lot of people just 50 or 100% above I'm going to get out. This has basically been rung through. Basically, everybody that's in now has been in for a while, so the costs are very low. So I think that market has a lot of upside to it in the coming months.
And people can follow you on petergrandich.com to get more updates and hear his broadcasts also. Peter, as usual, I can't tell you, you put a smile on my face every time, thoughtful, prescient in many, many ways, and an absolute pleasure to get a chance to chat. Thank you.
Same here, Michael. God bless you.